Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VIVA BIOTECH interim report. VIVA BIOTECH Holdings offers a diverse range of businesses and services to its biotechnology and pharmaceutical customers worldwide. These include structure-based drug discovery services, discovery biology services, protein expression, structural biology, hit discovery, etc., chemistry services, medicinal chemistry, analytical chemistry, purification preparation, etc., antibody/biologics research and development services, PROTAC/molecular, glue services, XDC platforms, conjugation, quality study, chemistry research, etc., contract development and manufacturing services, small molecule API, formulation development, pharmaceutical analysis, CMC filing and global filing registration support, research services. These comprehensive services enable VIVA BIOTECH Holdings to provide end-to-end solutions for its customers in the biotechnology and pharmaceutical industries. The skyrocketing of VIVA BIOTECH stock price. A year of unprecedented growth, VIVA BIOTECH stock price has experienced a remarkable surge of 244.29% in the past year, with some reports indicating an increase of up to 322.95%. This significant appreciation can be attributed to several key factors. Firstly, VIVA BIOTECH's financial performance and growth have been impressive. The company reported a net profit of RMB 222 million for the year ended December 31, 2024, with revenue reaching RMB 1,986.7 million and gross profit amounting to RMB 687.4 million. This turnaround was driven by the recovery of its contract research organization, CRO, business, enhanced operational efficiency, and income from milestone payments through its investments. Furthermore, the company's strategic developments and technological advancements have been instrumental in driving growth. The launch of its AI-driven drug discovery, AIDD platform has revolutionized new drug research and development, while its global expansion strategy, including the establishment of a Boston branch, has expanded its reach. Additionally, VIVA BIOTECH's investment and portfolio success have contributed to its stock price appreciation. Successful exits from various portfolio companies, such as Nereo Therapeutics, which was acquired by Boehringer Ingelheim for up to $1.3 billion, have generated substantial returns. Overall, the combination of strong financial performance, strategic growth, technological innovation, and successful investment activities has collectively contributed to VIVA BIOTECH's significant stock price appreciation over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: recovery in global biopharmaceutical investment and financing, surge in domestic innovative drug BD transactions in China, accumulated robust order backlog, strong recovery of CRO revenue in China, AI-enabled projects, strategic partnerships with domestic pharmaceutical companies. Revenue decline drivers: temporary minor fluctuation in global investment and financing, decrease in CDMO revenue due to upgrades and supply chain disruptions, customers headquartered outside mainland China. Net income and profit margins have experienced significant fluctuations. Initially, net income increased by 3.1% year-over-year due to a recovery in global biopharmaceutical investment and financing. However, it later decreased by approximately 31.4% year-on-year, primarily attributed to a decline in foreign exchange gain and government grants and subsidies. Profit margins have also shown mixed results. The gross profit margin increased by 6.3 percentage points to 40.8%, while adjusted non-IFRS net profit rose by nearly 9.1%. Conversely, it decreased by nearly 13.4% year-on-year. The surge in domestic innovative drug BD transactions and the successful implementation of new CDMO commercialization projects have contributed to these changes. The introduction of AI-enabled projects has also had a positive impact, accounting for 10% of total revenue. Furthermore, significant profitability improvement in the CMC business has been achieved through effective measures to improve operational efficiency. The company is indeed generating positive operating cash flow. The financial summary clearly indicates this, with specific numbers supporting the claim. On page 54, it is shown that cash generated from operations has increased to RMB 176,051 in 2025, compared to RMB 207,066 in 2024. And net cash flows from operating activities have also risen to RMB 129,823 in 2025 from RMB 152,330 in 2024. These numbers confirm a positive trend, demonstrating the company's ability to generate sufficient cash flow from its operations. The company's debt level and interest expenses have undergone significant changes over the past year. While there are conflicting reports on the total debt level, it appears that the overall trend is an increase. The total debt has risen from RMB 549.39 billion to RMB 600.97 billion, indicating a substantial growth. However, in contrast to this upward trend, interest expenses have decreased significantly. Finance costs dropped by 40.9%, RMB 18.5 million versus RMB 31.4 million, and total interest expense has also decreased from 32,407 to 18,514 RMB 0. This suggests that the company is managing its debt more efficiently, despite the increase in overall debt level. The company's financial performance varied across different segments and regions. Notably, the CRO business, mainland China, drug services, and CDMO and discovery commercialization services demonstrated strong performance. In contrast, Europe, other Asia countries, and regions out of mainland China struggled, while VIVA BioInnovator also underperformed. These disparities highlight areas of strength and weakness within the company's operations. Management's outlook and strategy. The company is optimistic about its future growth prospects. In the medium to long term, it will focus on original innovation and production. The management expects a full-year growth rate above current levels, driven by a robust order backlog, potential Fed rate cuts, and a strong recovery of CRO revenue in China. To maintain high profitability, operational efficiency measures will be implemented. Additionally, new modalities are emerging as a growth driver for CRO revenue, and the company has made significant progress in drug discovery, with over 2187 independent drug targets analyzed. A one-stop platform for novel MOA-based drug discovery and research is also being established. The company's financial summary reveals that it has made a deliberate decision to prioritize reinvesting profits over distributing them to shareholders. Specifically, the company has chosen not to pay dividends, opting instead to retain earnings and potentially use them for future growth initiatives or debt repayment. Additionally, there is no indication of share buybacks, suggesting that management is focused on investing in the business rather than returning capital to investors through this means. Concerns about inventory buildup or supply chain disruption exist. The company faces concerns regarding inventory buildup and supply chain disruption. Geopolitical factors have caused fluctuations in the supply chain business, page 8. Furthermore, a temporary impact on revenue from generic drug products has been observed due to these fluctuations. However, there is also evidence of improved efficiency in the supply chain. The cost of sales decreased by 21% from 2024 to 2025, page 47, which could be attributed to reduced inventory levels or enhanced supply chain management. This suggests that efforts are being made to mitigate potential disruptions and optimize operations. That concludes the financial summary for VIVA Biotech. Feel free to comment below, and I will be happy to answer them when possible.